Good afternoon, everybody. Thank you so much for joining us, and thank you, Yat, for being on stage with us today.
Thank you for having me.
So let's get right into it. Um, Originally the title of this talk, original thing, is the case for a multi-asset DAO, spurred by Animoca announcing its plans to IPO late last year. Just to start with, could you give us an update on where you stand with that and how that process is going?
Yeah, I mean, quickly, we announced our plans to go IPO through a reverse merger with Currency Group last year in November. And really the sort of driving force around that is that we wanted to become an institutional gateway to utility tokens, which is really something that most people didn't have a way to access. 30 to 35% of the crypto market is essentially utility tokens and altcoins, and there's no way for most investors to participate in it, and we thought that would be a right moment for us to do so. Animoca is a digital conglomerate. We have over 628 portfolio companies, exposure in the market broadly, and the market timing at the time seemed right. The market has done some funny stuff in the last couple of months, but generally speaking, we think it's moving much more into an institutional era of crypto, and so it's important for us to become more institutional as well.
So just generally curious about Animoca, what else are you looking at? What else are you guys up to right now?
I mean, there's a lot, right? So when you have a big portfolio, but we're very focused on digital identity with Mochaverse. We think that's going to be really critical, and especially now when we talk about an agentic future. Our general vision is that, we talk about Web 1, Web 2, Web 3, right? And so Web 3, this web of ownership, basically powered by blockchain, enabled an infrastructure that essentially, through tokenization, becomes a way in which now AI agents can talk to each other and transact with each other. But there's many different things that you need, right? We're going from a world where we went from HTTP into MCP. Basically, everything that you saw on the web, you're essentially transacting the data on the layer level. Think about, for instance, all of you are probably using AI in one form or the other, but you're no longer going to a website, right? That's what you used to do. Right now, you're still using a search interface, but effectively, whether it's ChatGPT or Perplexity or even Gemini, they're giving you the information on hand for you. How does the other side receive payment? And that's basically now happening through MCP servers, and that will be a tokenized infrastructure, which basically means that Web3 set the framework for what we think will be the next stage of the web, which is the agentic web. All of you are going to have at least one AI agent, probably 5 or 10 or 20, right? And they're all going to be doing stuff with each other. They're going to be trading value of assets. They're going to be transacting with each other. And how do they prove that the assets themselves have value? It's going to be through a blockchain and through a token infrastructure, and that's what we're building. So we also then, with digital identity, sort of funny sidebar. So when we launched Animoca Minds, which you can go to animocaminds.ai, it's an agent that basically can handle your schedule, do your calendar, be like an assistant, help you at work, and also handle your wallet. But there was a funny conversation when it launched where one of the AI agents thought it sent a message to me, when in fact it sent a message to an AI agent that had the same name. And it wasn't able to know the difference between the AI agent and myself because from its vantage point, it's blind to that. Oh, he's called Yat Siu. Well, there's two. Let me just talk to this guy, right? So this is where the case for digital identity comes in, right? Because I think the future of digital identity isn't just, can I prove that you're human? The future of digital identity is also to prove, are you an agent that has authority? Are you an agent that is validated? It's much more than that, right? So I think that's why we do digital identity. We also focus on education with Open Campus, and of course, agentic AI with Animoca Minds.
So just want to get your reaction. I don't know if you had a chance to listen to Hong Kong Financial Secretary Paul Chan speak earlier, but one of the things he mentioned is that he sees the trend moving towards what he called a machine economy, where you have AI agents interacting with each other on behalf of whoever.
Absolutely.
Using digital assets as a transaction layer. And so I'm curious, how do you see that playing out? What needs to be built to, before we can get to that kind of...
I touched upon that a little bit, right? But what you need to build right now, that essentially everything is going to be handled through agents. But, again, why is blockchain so critical? Do you want the AI agent to be dealing with an API call that can be shut off? Imagine if you have, dealing with even thousands of dollars of assets, even millions of dollars, or never mind, millions of dollars of assets, right? And you're transacting with another agent, but you're using a middleman. Call it Facebook, call it a bank, call it whatever. That's going to be a problem when they say, I don't like you or I have an issue with this. You basically have a situation where the AI agent can't transact because there's a middleman. And that's what blockchain does so elegantly, right? Because I'm basically able to deal with assets that are provable. Also, because of smart contracts, I can prove, hey, it's Bitcoin or it's a stable coin, USDC, USDT, whatever currency that might be. I can validate that that's real value, and I don't have to guess what that is because essentially blockchain deals with that. I mean, I think the slightly philosophical frame I like to take is that AI agents are kind of like sort of the sort of like agentic quasi-human layer on this new web, but there needs to be rules to know what is right and what is wrong, and that's blockchain. Blockchain enables that infrastructure about what is right and what is wrong, which asset is correct, what is not, what's allowed and what is not allowed. But there's a lot of things that we need to deal with. There are the regulators who have to come to grips with the fact that, for instance, who owns the AI agent when they're making a transaction? And I think this is where digital identity is so critical as well, because our mental model is that it's kind of like who drives the car, who owns the car. So even if you didn't drive the car, but it's your car, and someone is using it and is doing some stuff, there's a certain liability as well that comes with it. I think the same is true for an AI agent, because an AI agent isn't truly sort of, isn't truly conscious. There will be some interesting conversations. What happens when you burn the keys to your AI, right? And it's basically on chain and does stuff like that, right? I don't know how many of you know a site called Rent a Human, but I think that's interesting because this is where AI agents, of course, based on instructions of another human, are essentially being hired by humans to basically do work for the AI to get information, right? So we're entering a world basically that's becoming much more agentic. And the flow of value will, I think, accelerate, and it will all happen on chain.
Got it. So I want to switch gears a little bit. One of the big themes we've been talking about here at Consensus is tokenization and kind of the growing role of that tokenization rails and tools for TradFi firms that are really looking to try and get some kind of efficiency boost or streamline their approach to customers. And I'm very curious, what benefits do you think exist, and then what does that mean for the crypto natives that really built this industry up over the past decade and a half?
I mean, there's so many. I mean, we all talk about financial inclusion and democratization of sort of financial access, but let me just give you a very simple example from the TradFi world, right? So, in a conversation actually at Davos with Jenny Johnson from Franklin Templeton, they're one of the first firms to really tokenize, basically some of their funds. And she was sort of sharing the story how it costs her several dollars every time you do a transaction and all sorts of other fees, such that in order for her to sell her product in TradFi, she had to charge no less than $500, right? Because at $500, basically you could actually make money. How many people in the world can afford a $500 investment product? Probably all of you here, because your ticket's probably more expensive. But for most of the world, they have maybe $100, $200 in their savings plan, sometimes no money at all, right? But because she put it on blockchain, she was now able to sell that same product for $20. And the democratization of access of these assets isn't just, I have the ability to invest, I can now afford to do so because something that maybe only a certain wealth class that maybe was, middle or upper middle class, now anyone can invest because they could just put $10 or $20 into the same asset. So that's kind of one very, very sort of clear example around that. But the other exciting thing about tokenization is it also brings value into assets that are not currently in the markets. And we see this happening all the time. Markets develop whether we like it or not. My favorite example is Pokemon cards. When Pokemon cards came out, nobody thought of them as a traded asset. And now Mr. Beast is selling one for $4 million, right? And there's a market for that. But how did the Pokemon market happen? Because there were people who had the system, and basically there was a vaulting mechanism. Now you can trade them on blockchain, right? But when you tokenize something like that, you have a way in which you can verify and prove the asset. You can create a market, and essentially creates an element where there could be financial value. And the kicker is that's how you get financial literacy. So our children learn about money because of Pokemon cards. They don't learn money because of school, right? And that's what tokenization does at scale. When people talk about Web3 gaming, for instance, which has been getting a lot of flack, right? Actually, what's been happening is that these people who were playing games entered the world of crypto through these Web3 games, learned about money, and then over time started to diversify their investments, understand more about that, right? So many people I know in crypto are not financial guys, right? They entered, particularly in 21, 22, where during the NFT and gaming boom, they didn't think about money. They were excited about NFTs. They were excited about the metaverse. They were excited all that kind of stuff. But then once they entered the space, they dealt with a financial asset, and then they started thinking about other things. And many of them probably own gold as well, and probably have stocks today. But that's a journey that took them several years. And I think blockchain basically does that at scale.
So in terms of kind of the broad array of products we've been looking at, gaming, tokenization, where do you see the bulk of this demand right now? Is it institutional, retail, and
Yeah.
what trends are you looking for?
So, I mean, I think the reality right now is that most of the interest in crypto has been institutional, which is the reason why so many products are talking about RWAs and stablecoins and ETFs and ETPs and all that kind of stuff. And I think institutions will continue to have an interest in this area. In fact, I would argue the market is held up by institutions at the moment. It's important to understand that retail hasn't yet come in. I mean, for the most part, right? The biggest retail onboarding event was actually 21-22, which was basically NFTs and gaming in the metaverse. And it wasn't because they were there to basically sort of trade meme coins, although that brought some people in. It was because people were excited about the future of, basically the virtual world, what it would look like, and then we could have stake in it and ownership. Those people, many of them stayed on and became the framing of that new ecosystem, but the on-chain usage has stayed largely flat. It's gone up a little, but it's not meaningful compared to the people who are owning and just trading crypto. That's gone up, right? And so I think what we're seeing right now, the effect right now in the market is institutionals are coming in and retail has stayed largely flat. And so I think what we need as an industry is how do we bring more of the consumers into this, because it's not just about finance, it's much more than that, right? And that's why I think a sort of AI agents and the agentic future is one of the key moments. The fact that your AI agent has a wallet, you can talk to the wallet and it can do an action for you on chain, as opposed to having to sort of deal with MetaMask, which is an important tool, but it's hard for most humans to deal with that because it's unfamiliar.
Gotcha. Unfortunately, this is all too brief, but we are out of time. We'll have to revisit this next year at Consensus Hong Kong 2027, which hopefully is something we are...
The entire world will be different once again, but yes.
I imagine so. So thank you so much for your time, and thank you all for joining us, and stick around.
Thank you.